In this video, I'm going to talk about the 7 Fibonacci trading secrets that I learned over more than a decade of studying the financial markets. The principles that underlie the Fibonacci sequence can be applied to many different trading tools and in many different ways. So without further ado, let's begin talking about the Fibonacci trading secrets. Secret number 1. The Fibonacci sequence and the golden ratio. Before learning about the Fibonacci trading tools and their secrets, it's important to know where they come from so you can develop a greater sense of trust in these tools. The Fibonacci trading tools are all based on the Fibonacci sequence, which is a series of numbers that start with 0 and 1. To know the next number in the sequence, we always sum the last two numbers in the sequence. For example, to know the third number in the sequence, we add the first two numbers in the sequence, which are 0 and 1. The result will of course be 1. To calculate the fourth number in the sequence, we repeat the same process. This time we sum 1 plus 1 to get 2. This is how the entire Fibonacci sequence is calculated. If we keep repeating this process, the sequence begins to look like this, and we can keep going until infinity. For the practical purposes of trading, we are interested in a specific property of the Fibonacci sequence, which is called the golden ratio. If we take any number from the Fibonacci sequence and divide it by the previous term, we'll always get roughly the same ratio, which is 1.618. This doesn't happen in the first terms of the sequence because they are small numbers, but as the series progresses, we always will get the golden ratio if we divide one term by the previous term. Let's take the higher numbers in the sequence so we can observe other properties. Here we can observe that if we divide one term by the previous term, we get the 1.618 ratio. Another interesting thing is that if we divide one term by the next number in the sequence, we'll always get the 0.618 ratio. These are the two simplest and most powerful Fibonacci ratios. We can also start to play with the ratios to find new ones. For example, if we divide one term in the sequence by the term that is two terms back instead of one, we will always get the 2.618 ratio. Using a similar approach from previous examples, if now we divide one term by the term that is two terms after, we will always get the 0.382 ratio. We can do this indefinitely, but I think you can see where this is going by now. This is where those Fibonacci ratios you see in the charts come from. Secret number 2. Fibonacci in nature and the markets. The Fibonacci sequence, the golden ratio, and the other Fibonacci ratios became famous because they can be observed in a number of different places in nature. Perhaps the most iconic of these places is the Nautilus shell, which follows precisely the shape of a Fibonacci spiral. Fibonacci ratios are believed to represent some sort of fundamental reality of nature, meaning that there is something about the mathematical structure of reality that can be understood through the Fibonacci ratios and numbers. Based on that assumption, traders started to apply Fibonacci ratios to price charts, because price charts are also a reflection of human behavior. It's weird to think that markets are a natural reflection of human behavior because they are nested in technological systems, but the way prices fluctuate are motivated by raw human impulses. The theory behind the use of Fibonacci ratios in the financial markets claims that these ratios are able to capture the degree of future price fluctuations based on past price fluctuations. There is no formal scientific theory that positively claims that. That's just an assumption, but we can definitely find some anecdotal evidence to support it if we look at price charts. In this chart, we can see a very simple example of Fibonacci ratios in action. A Fibonacci expansion tool was plotted on the blue price vectors. We can see that the market extends itself until it reaches the 1.618 ratio of those blue vectors almost exactly. This sort of thing happens too frequently in price charts to be considered a coincidence, but we still need to remember there is no scientific theory that supports this idea. This is merely anecdotal evidence collected by traders over time. Secret number 3. The best Fibonacci ratios. As we saw in the first secret about Fibonacci, there is an infinite number of ratios we can take from the Fibonacci series, and that begs the question of which ratios are indeed the best to use in trading. The answer to this question is that the simplest ratios are the best ones to use because they tend to be the most frequent and the most powerful. You can think of the simpler ratios as more powerful abstractions about the Fibonacci series. The simplest ratios we can get are the 1.618, 2.618, 0.618, and the 0.382. It's important to choose a small number of Fibonacci ratios to use because your charts can very easily become too cluttered with meaningless lines if you decide to use too many ratios. The problem with that, of course, is that the more complex ratios will not yield the same results as the simplest ratios. Some people like to throw the 0.5, 1, and 2 ratios as well because of the first terms in the Fibonacci series, which is perfectly valid too. Beyond being the simplest ratios in mathematical terms, these are also the ratios that most Fibonacci traders use, so they tend to have a much more pronounced effect than all the many other complex ratios. Secret number 4. Fibonacci in space and time. Most traders use the Fibonacci expansion and retracement tools to deal with price in terms of space, meaning where price is more likely to land next based on the ratios from the more recent price vectors. However, Fibonacci tools can also be applied in the temporal dimension. In other words, the time it takes for price to form highs and lows can give some hints about the duration of future price movements based on the Fibonacci ratios. Another way of looking at this is that we can use Fibonacci ratios in the spatial dimension with horizontal lines and in the temporal dimension with vertical lines. In this chart, we can see an example of a Fibonacci tool working in the temporal dimension. The area between the two black vertical lines represents the time it took for the market to create the two price vectors marked in blue. This represents 100% of the time necessary to create those two vectors. The dotted line shows the same length of time, but extended into the future using the 1.618 ratio. Notice how this ratio predicted when the next reversal happened. It's necessary to say that this tool works a lot less effectively than the common expansion and retracement tools, but if you can align the Fibonacci time tool with these other tools, it will serve as an extra confirmation for your market analysis. Secret number 5. Fibonacci Channels. A less frequently used aspect of the Fibonacci ratios dwells somewhere in between the spatial and temporal dimensions like we just saw, and it's the application of Fibonacci channels. The way regular channels are drawn is by using equidistant spaces between the channel boundaries, but we can change that by applying Fibonacci ratios to the channel boundaries. In this chart, we can see a good example of that. The gray area represents the boundaries of a normal channel grounded on the gray circles. The green space is a duplication of the gray channel area, but respecting a 1.618 ratio. Notice how the lower boundary highlighted by the 1.618 line of the channel captures two large reversal points in price. Observe how I have been only using the simplest Fibonacci ratios so far to give evidence that these are indeed the best ratios to use. Secret number 6. Fibforks. One very interesting use of the Fibonacci ratios is using them as a layer on top of another great tool called the Andrews pitchfork. The lines of the pitchfork are equidistant, just like other types of channels, but we can take advantage of the angle generated by the pitchforks at the same time that we can explore non-equidistant spaces between the pitchfork lines that follow the Fibonacci ratios. In this chart, we can see an example of pitchforks that has a Fibonacci extension. The black lines are the original and equidistant lines of the pitchfork. The blue lines are the 1.618 extensions. Observe how the lower Fibonacci line captures the absolute bottom of this market very precisely. The question of how and when to use these ratios depends on several other factors in the price action analysis. Secret number 7. Fibonacci Clusters. A perhaps more advanced and subtle use of the Fibonacci ratios is a technique called Fibonacci Cluster, where we plot two or more Fibonacci retracement or expansion tools to find levels where different ratios correlate or intersect. In this chart, we can see two sets of Fibonacci expansions. The first one is plotted on the blue price vectors, and the second one is plotted on the red price vectors. We can see that the 2.618 level from the first expansion tool is more or less in the same level as the 1.618 level of the second expansion tool. The space in between these two levels that are close to each other forms some sort of reversal zone for price. In most cases, Fibonacci ratios from different tools will align near each other, but sometimes they will be layered on top of each other exactly, which represent a stronger support and resistance line. The use of such lines cannot be random. There's a right way and a right time to use them. I hope you learned something new and useful with this video. If you want to learn how to trade with professional techniques, please check out the video courses that I provide. For beginners to intermediate traders, I offer the Fractal Flow series, which is composed by the Fractal Flow strategy, the Market Maker strategy, and the Newtonian trading strategy. Each one of these will teach you a different approach to trading. Each of these strategies work on their own, but they can be combined together also. They work on any market and in any time frame that you wish to trade. For intermediate to advanced traders, I offer the Price Action series, which is composed by the heavyweight techniques involving fractal geometry, linear algebra, and very refined contextual market reading to find the most accurate trade entries and exits that are possible to find on a price chart. You can visit my website fractalflowpro.com to see more details about the table of contents of each course and the testimonials from students. If you wish to support the channel, please click the like button, subscribe to the channel, activate the notifications button, share the video, and leave your feedback below in the comment section. Don't forget also to check the other videos in the channel. Thank you very much for watching, and I hope to see you in the next videos. Take care.